So hello everyone, welcome back to the final lesson of economics, and today we'll be doing the part 2 of tax system and industry. So this will be very helpful for your NPSC as well as NSSB economics lesson. And before I start my class, I would like to announce that there's mock test for Combined Technical, and if you're interested you can contact in the WhatsApp for more information regarding the mock test. And if you're interested, these are some of the questions that was said in the last mock test. So you can contact in the WhatsApp for more information. So let us start with the economics class. Question number 6. Which of the following curves gives the relation between tax rate and tax amount? So tax rate or tax amount do kundu relation de. That is Philip curve, Laffer's curve, Kuznets or Lorentz curve. That is, what is the answer? So first of all, কি আছে Laffer's curve. So Laffer's curve to Philip curve. Philip curve to কি আছে বলে তো it shows a relationship between unemployment আৰু কি কয় inflation দা তাইলা relation to ইটো show কৰে by Philip curve. Laffer's curve to ইটো shows tax rate লাজে আৰু Kuznets curve to কি আছে বলে তো it shows the relation between income inequality. That is inequality basically আৰু economic growth. Those and lastly Lorentz curve. Lorentz curve to কি আছে বলে তো ইটো কি কয় Gini coefficient, that is wealth distribution. The wealth distribution do tai show kore. So Philip curve to unemployment. Just remember that Philip to unemployed ase, so it shows unemployment and inflation. Laffer's to tax means Laffer to tax bishi de. Kuznets to ke to inequality means tai inequality measure kore. Or Lorentz to tai bishi rich ase tai paisa bak kore. So this is the answer. So from this we know that what is the answer? The answer is Laffer's curve. Shows the relationship between tax rate and amount of tax revenue. So Laffer curves was developed by Arthur Laffer to show the relation between tax rate and amount of tax revenue collected by the government. It describes how changes in tax rate affects the government revenue. Tax rate increase কৰিলে তো মনন কাম কৰা ছাড়ি দিব. It also states that if tax rates are increased up to a certain level, then tax revenue will actually fall. It provides an economic justification for the politically popular policy of cutting tax rate. That is, if we study the graph, it is tax rate to tax revenue or tax rate. So tax rate to 1, 2, 3, 4, 5, 6, 7. For example, 1 hazar to, for example, 10 hazar. So for example 90% tax rate. So usually mon income tax kando 10% kate. So usually to itu fale hobo tax rate to. So tax rate kita mon increase kore for from 0 to 100. The curve is first to tai tax revenue to uthe. That is ekta point tak punja bujida, that is revenue maximizing point bujida tai la revenue to nami jai. Means ki legule to people do not want to work. Don't want to work. For example, rupees 50 lakhs earn crazy every month. So they earn crazy. So government will tax othaiza. So it will come at the point that tu alchi lai jao. Hey, kam korale ko kam nahi because government sob othaina jai to kam korle ki lab. So ituke this is explained by the Laffer's curve. So I hope you all have understood this. Next question, and next that is Philip curve. So Philip curve to ke jogule ta inflation or unemployment tai measure kore. Or AW Phillips wa kuje it states the relationship between it states that inflation and unemployment have a stable and inverse relationship. Higher inflation the lower unemployment and vice versa. That is inflation do unemployment do increase hoise gole to inflation unemployment to uthie je kule to for example from 0 to for example 10 to for example 90 nga uthi kule to basically taila inflation bi nami jaw that is it shows that the high inflation, that is inflation high hole to unemployment kom dibo. So if you can see from the graph, that is high unemployment to employment high as that means it shows that inflation to is a low unemployment as. So next Kuznets curve. So Kuznets curve to is it measures income growth and inequality, means poisa kiman uthibo in iman inequality uthi jaw. Inequality means rich or poor la differentiation to uthi jaw. That it was proposed by Simon Kuznets. It is an inverted U shape, meaning that initially economic growth leads to greater inequality followed by reduction in inequality. That is if value though that is per capita income increase kore. Per capita means every year kiman income earn kore by every individual. For example 90 rupees earn kore are to 9,000 earn kore per capita income to kitya 90 earn grow tai itu developing, that is poor countries kan as that is asti per capita increase usually the income inequality to uti jaw. So it will come at a time at a turning point where kiko higher inequality to go at high per capita income. For example India 1947 de taila per capita income 90 dekshe ita 2024 de taila per capita income to for example $4,500 they do $90 so it means that the inequality is high that is high first 0 te thaki tam inequality kam de hudibi kitya asti uti na jay last day itu high point te tai inequality bi tai 100 te that means adani aro tujin na difference to adani aro itu middle class kana difference to bishi ase. For example middle class kana income to rupees 4,500 adam de adani la income to 4,500 crores dago. That is inequality bishi je difference ikona rich or means difference bishi je rich or poor la mojode. But as we can see itu graph pa inverted use, that is aro itu per capita income last day $9,000 utadam de do astes de tala in that developed countries de inequality kom dijo, that is rich or poor same hojo. So this is the Kuznets curve. Next Lorentz curve the case it is used to measure the wealth distribution. So wealth distribution that is wealth distribution or Lorentz curve the Gini coefficient be measure proper. So next in India GST, that is goods and service tax, became effective from that it became effective from 1st of July 2017. That is value added tax to replace korna GST hoje. That is the goods and service tax are the 101 amendment ase constitution la aro GST la definition it is a multi-stage system tax system which is comprehensive in nature and applied to the sale of goods and services. The main aim of this tax system is to curb the cascading effect of other indirect tax. Goods and service tax is applicable throughout the country. Next question number 8. Which of the following is not included in GST? GST di ki nai cause excess as a value added as a service tax as a kali custom duty means import tax kando not akibo, that is import tax to alag kamba sai. So the answer is custom duty. So custom duty is not included in GST. It refers to the tax imposed on goods when they are imposed across international borders. For example, Bhutan ba saman anishiguledo you have to pay custom duty. So the government uses this duty to raise its revenue, safeguard domestic industry, and regulate the movement of goods. It was for example Bhutan ba sosta saman as this thing that is for example Bhutan ba pot anese idu pot to sosta no le bishi sosta no such that India the market disrupt nukrule sabde, that is safeguard domestic industry aro revenue increase kule. It was a aro GST do slabs take kiki 0%, 5%, 12%, 18% or 28%. Will be under GST de petrol aro mutukan nahe, and electricity is not under GST. Excise to ke means tax imposed on goods for their production, licensing and sale. Aro to excise tax to petroleum required apply gore. For example, Assam ba mudu ane, so itu ba excise tax to katibo. That is mudu la dam do katibo. Value of the tax to itu GST ke replace gore. It is an indirect tax for every point of production or service tax to for service. For example, to ekta cinema hall de jese, so itu cinema hall la service tax takibo. That is to get service kurala. Question number 9. That is, which of the following is not an indirect tax? So, excise tax is a customs tax is so indirect as a sub direct as a just that it goods and service though it is not an which is not an indirect tax question. So sub the indirect as a, so the answer is wealth tax. Wealth tax though it is not an indirect tax, it is a direct tax. So direct tax, a tax that is paid to the government directly, imposed on the taxpayer, and liability of tax cannot be suppressed on other taxpayers. For example, the wealth tax, income tax, corporate tax, minimum other tax, dividend distribution tax, tax on security capital gains. Itu concept to direct taxes. Means tu kiman income increase kurle itu la sabte tu la tax to katibo. Indirect tax to, for example, I have explained in the last class, Amul la. Tu Amul, for example, rupees 420 days. Itu Amul la industry dedo Amul la industry itu tai industry tu kud ma itu do 350 wo holibi tala packaging tala transport ar tala excise means kiki kan tax kan sob katina last tu 420 pay gore, that is indirectly to tax pay gore, that is they are called indirect taxes. Next, question number 10. The last question is tax on sale of inherited property to keza. So poverty inherit kora. For example, the grandfather grandmother ba tui ekta property and kora. For example, Kohima de you have a family or you have a for example 10 acres of land. So itu tui inherit kora. So itu get tax to kude ki tax ko itu ke capital gain tax made. So capital gain tax or profits from the sale of an asset, that is shares of stocks, a piece of land, business, or generally considered taxable amount. Under the income tax act, capital tax in India need not be paid in case the individual inherits the property or there is no sale. However, if the person who has inherited decides to sell, this tax will have to be paid in income that has been generated from the sale, that is capital gain tax. For example, Tuila grandfather, your grandfather, he was a very rich man and tai 120 by 120 ekta 120 by 120 ekta matik ta tai tuki charna jese. So it will be gonna in, for example, Dimapur, but you are in need of money to alag taka de paisa invest korma je. So income tax ek pagoi ki tu 120 by 120 inherit korje to idu tax dibole ko kam nai. For example, because grandfather already pay korna je, you not pay, but you once 120 by 120 bigger rule manje to a person, so you have to pay the tax. Only Nagaland applicable because of Article 371A, but in other places like Gujarat, for example, like Karnataka or Tamil Nadu, like that, you have to pay the capital gain tax. So with this, the last part of the economics class has been completed, and if you're interested in the mock test, the link is provided in the description. You can check it out and you can assess your preparation for the NPSC Command Technical General Studies. So all the best for exam, and thank you guys, and we'll catch you guys later. Thank you.